Hi, everybody. Welcome to the Middle Class Investor. It is Sunday evening, almost Monday morning, 11:55 p.m. on Sunday. So hopefully everybody got their clocks turned forward and uh, managed to make it through the day, and we'll be ready to go to work on Monday. Um, Spring forward is always difficult for me. I always feel like I don't know. I feel like I've been on a 4-hour plane flight or something, or I'm out of time zone. But anyway, um, the market, as you know, has been rallying pretty strongly. And we can zoom in on this last week. This last week almost engulfed the whole previous week. In fact, it gapped down, which is strange, but the week gapped down, but then rallied all the way up and almost closed to a new high on the S&P. Of course, if you're looking, whether you're looking at the futures, let me just, this is a good time to say this. There's a lot of divergences in the market. So the Dow is performing less well. The Nasdaq ended up making new highs, like up here, and the S&P is kind of in the middle. It performed better than the Dow, but not as good as the Nasdaq. So we got a lot of divergences, excuse me, in the market, which is not unusual. But what's going to be key here is kind of a zone right around just beyond this previous high and maybe into here. If we go much beyond here, this is likely to continue up uh, in some sort of fashion. Maybe not that high, but the thing is, the market, the market's designed really to fool most of the people most of the time. So it's very unusual. First of all, this move down was 5 waves, so that tells us that we have potentially a trend change. But the problem, really, I guess, is this could just be it could just look like 5 waves, but actually isn't. And we'll zoom in and look at it in a second so you can kind of see what I mean. Then you have this rally up, and then down, and then up, and then back down, and then back up. So this is very corrective looking. But it could be, it could be multiple degrees of trend or something unfolding, and sometimes that can confuse the picture. So I think we're just going to have to wait and see what happens around this zone right in here. But certainly, if you're still in the market, continue to be in, and I think it makes a lot of sense to play for a new high. Of course, if this starts to roll over and we break these lows, say right in here, then I think it's more likely that the top is in, and we're going to start making not only lower highs, which this would be if the market rolled over right here. Let's just back up a second. If the market, let's say, went up a little higher and then rolled over and started down and took out this low here, I think that would signal, that the top is in. And once it breaks here, that would be then a lower high and a lower low. So potentially a longer term trend change. And that's right now, I think it's 50-50. I think it could go either way. The whole strength in the market on Friday really surprised me. I was kind of shocked and caught off guard that it would have rallied as hard as it did. What I want to do, though, before we move on, is I want to look at the Dow, because on the Dow you can look at volume, and also we'll see how the Dow didn't quite go as high. See how it didn't make it as high as the S&P did. But one of the things you'll notice, look at this, look at the volume on this week right here. This was that last down week where we came in and made some lows, real high volume, and then rally on low volume, rally on low volume, and then look here, another down week on higher volume than these 2 weeks. and even higher volume than this last week. So anytime you have your down days or down weeks are on higher volume than your up weeks, that is not a good sign for more upward pressure. That's usually a bad sign. That usually means the volume usually is kind of telling you where the pressure is. So if we look at let's say a 1-year chart, and we look at the daily volume. Let's do that as well. I don't always look at volume, but sometimes it gives you some interesting information. So you can see that here, as the market was falling, the volume was rising. And then right here where it was rising, of course you can't just look at the 1 day, because what happened here is it opened up, ran down, and then ran all the way back up and closed higher. But it was still a lower low, right? There was still a lower low here than here. So you have to kind of look at this first white candle, not as a down day, but just as a neutral day, as a day where there was still a lot of fear in the market. So you have this volume, and then the very next day you have this gap up. Well, actually, it just opened sideways, ran up, ran back down, and closed. And you can see the volume's low there. And then we have another down day, the volume's increasing. And then again, here, this day here, even though it finished higher, it made a lower low, so that on the higher volume. And then here, as we start making higher highs and higher lows, see the volume declining and kind of flattening out. And then here we have another series of downs, kind of on just neutral volume. It just went sideways. The volume went sideways. But then here we start going up again, and even this day here, this whole time we've been going up. I mean, it's just been on lower volume. So you have to pay attention to that. It's important. Volume is something that is worth looking at from time to time, and certainly it can kind of give you some insight. Again, though, Friday really caught me off guard. I was really surprised. So I mean, I'd still say there's a decent chance to come up here and make a higher high. We have these gaps on the chart, and gaps don't like to be on the chart. So there's one here. Let's see. See this little shaded area? There's a small gap there, and then there's a larger gap between this day and this day. And those gaps don't like to be on the chart generally, so those could fill. You just have to be prepared for a potential higher high. All right, let's look at volatility. Volatility, we've had this huge spike up into the 50s, 50, I guess, a little over 50, and then we've been dropping off ever since. And of course, Friday, on that big up day, the volatility made the lowest low for the last since mid-February. So is volatility going to get back down here as low as it was? Probably not. Probably we're not going to see that. I think volatility is just temporarily pulling back, and we'll probably see it rally some more, whether we get more upside or we get a sharp downside move. All right, let's look at 13-week Treasury yield. You can see it was pulling back for the last. Here, let me go back to weekly chart. Oops, sorry about that. So you can see we pulled back last week, kind of ran up and then pulled back. And then this past week, we gapped up, ran up, and pulled back a little bit toward the end of the week. But by and large, I mean, short-term Treasury yields are on the rise. Now, if we look at yields on the 10-year, well, I guess I have to put the dollar sign in there. Dollar sign TNX. Here's the 10-year. Again, you can see there's a small pullback here for the last couple of weeks. Kind of see it here. There's kind of a little flag pattern forming. And you can see we're just starting to break out of that flag, so I would expect that to continue. Could pull back a little bit before it takes off, but certainly it looks like the selling pressure is about done on the 10-year. So if the bond market starts taking off next week, we could see some negative impact on the stocks. All right, let's look at these countries. It's Germany. You can see Germany's rally was even weaker than the U.S. rally. Japan, same thing. Japan's rally weaker than the Dow. It's not even rallying anywhere near this previous high here. And then the UK. The UK's been weaker all along, and it's not letting me. There we go. By the way, the audio might be a little off. My mic, I've misplaced my mic, so I'm just using the open mic on the computer, and I apologize in advance for it not being that great. It kind of echoes a little bit and stuff like that, but I'll get back to that mic here soon. But here's the UK. Same thing. The UK didn't rally as high as our markets did, and so we could be setting up for a decent sized sell-off. But again, there's gaps on the charts, and I'll be honest with you, it makes things a lot more difficult to. It's hard enough to predict what's likely to happen. I think we're right in the middle. You've seen this before when we're right in the middle of a particular zone. So if I'm looking at the S&P 500, we're kind of in the middle to the upper end of this rundown. So, it's just hard to say. Now, another thing we could look at, the 9-month up chart. Let's see. So from top to bottom, so from here to here was almost 12 trading days. This is a little trick I learned a while back. So if that's 12 trading days down, 62% ratio of that would be about 20, almost 20 trading days up, 19 trading days up. So let's see what we got here. That is 28 days. So that's actually even more of a Fibonacci number than than I was thinking. Let's see, 12 trading days, 28. So that's a 50%, or that's a how do I do the math on that? Anyway, I was expecting this to be about 20 trading days, but it's actually about 28. So, who knows? But sometimes what will happen is you'll get a pullback, and the pullback relative to the rally will be about a 62%. It'll be 62% of the rally. So, in other words, this leg here would be 62% of this leg, which would mean this would have to be about 20 days. So, because if I took 20, right now, if I took it's 28 trading days so far, if I took 62% of that, that means this down move would be about 17 days. But as I just measured, it's actually more like 12 trading days. So, and for some reason I can't. There we go. Should go back there. You can see from there to there is, well, you can't see, but I can see it's about 12 trading days. Anyway, I hadn't checked that in the beginning, so it just didn't work out. But this could be, like a double zigzag kind of pattern, and those take longer and they're more complex. The nice thing, I guess it's the nice thing, uh, if you're a trader, what happens a lot of times, if you get a more complex second wave, that means that the fourth wave will be real simple. So instead of, let me see if I can illustrate this. It's kind of an interesting concept or an interesting thing that happens in Elliott wave. But let's say this is your first move down, and your move up is more complex. Like so. It could even be like this, and like that, let's say. And then you get your third wave, which is pretty substantial. And a lot of times your fourth wave will be really simple, and then it'll immediately resume the fifth wave. So, for example, if you're trading this, and let's say you enter a short position right here, let's say you think, okay, well, this was 12 days, so maybe this will be like 18 days. Well, this won't be very many. This will be like 6 or 8, and then this will be like 6 or 8. So instead of having to worry about a long, complicated fourth wave that could take a month, you could, if you're buying options, for example, you could buy a put and just buy 30 days, let's say, out of the money with a strike right in here. And then once it traveled to that area and beyond, you'd make a lot more money, just because you wouldn't have to worry about the time decay and some sort of complicated fourth wave here, because the complication, Elliott has this concept called alternation. So if you have a complex wave in 2, you generally have a simple retracement in 4, and vice versa. So if you have a simple in 2, then you get a complex in 4. That's why you get, a lot of times you get triangles in the fourth wave. But we shouldn't see that this time if this is a 2 and it's a complex 2. All right, that was getting in the weeds a little bit, but I thought it was maybe important to mention. All right, let's look at the charts here, and here's gold. Gold started to sell off week before last. We talked about that. We talked about it maybe going a little bit further, and then it started to sell off. So it looks like gold now is comfortably in. Let's zoom in a little bit. It's comfortably in this zone that we talked about, where we should start selling off. We were looking at a pivot right here. Of course, when we look for pivots, then we look for a zone above the pivot. Of course, the market ran right up into that zone, and so I would look for gold to make its way down into this area and potentially further. I mean, this could be this could be like A, B, C, A. So this could be A wave, and then this could be B. So maybe it's more complex. Maybe it doesn't make a lower low. Maybe what it does is it makes a triangle. So it does something like this, and then makes a C down. So I don't know, but my point is, I think the point in looking at gold right now is that the sell looks like the trend has changed. We should know more next week. If this closes a little bit lower next week, then I would think this would make its way down to at least down here into, this is this is not gold. I'm sorry. This is not gold. This is the euro. And I apologize. Actually, it's the US dollar, Canadian dollar. So let me go back to gold. I think gold's been selling off too. So you can see they kind of look similar. A, B. So we probably have, my guess is, because this didn't make a higher high, we probably got some sort of triangle forming. Kind of an A, B, C, D, E, and then down. Or well, it could be a more complex. It could actually come here and then come up and then go down. But right now, I think gold, I would look for gold to come down to, somewhere between these two pivots here. Let me zoom in on this so you can see what I'm talking about. You can see there's a pivot. There's a pivot here. That pivot, and then there's another pivot right here. And so I would look for gold to come down to some place in between these two, somewhere in here. So gold make its way down to here and then rally. And like I said, if it's a triangle, it'll come down here again and then rally and then fall. And then maybe take off up here and then down for a final C. So there's just gold. I mean, this is some sort of complex, fourth wave, B wave, or something's going on here. It's really hard to tell. But it looks like maybe it wants to go lower and get somewhere down here around the 1220 to 1225 area. All right, now let's go look at the euro. I apologize for that earlier. The euro's been really, kind of selling off, kind of choppy at first, then rally, and then really sold off hard. For the last year, we've had this strong rally up, and it looks like the euro is about done, and we're starting to sell off. If you zoom in a little bit on like an hourly chart or something, we had a pretty big sell-off, and now we're having a little rally in there. Could rally a little further before we get maybe the next wave. Maybe it rallies up into here, and then we get the next wave down, which should take us into this pivot here. So pivot just off of this low here, so somewhere around here. And that's kind of what I see with the euro. So that's going to take us. That should take us down to about 121 area, somewhere around there. The U.S. dollar CAD, to me this looks like a pretty big ABC, but then it rallied quite a bit. Now it's selling off again. If you zoom in on the U.S. dollar CAD, it made a pretty good topping tail, sold off hard, and is now down here a little bit below that. Now, what makes a lot of sense here is, oops, sorry about that. What makes a lot of sense here is you kind of got a pivot right in here, and then you can see that off this pivot, the market went into this decision point area right above the pivot, and then this is a pretty good sized topping tail here. So I would say the U.S. dollar CAD has got to move probably at least back into this area here and potentially lower. It may be into this area here actually. So for the near term, the U.S. dollar CAD is going to be short. All right, we already covered the euro U.S. dollar. Let's look at oil real quick. You're starting to see some similarities between oil and gold. They kind of have the same looking charts, and of course they are commodities. But you can see oil, rallied into this decision point area, sold off. It looks like it's got a little retracement going, and I suspect that the next sell-off will be more substantial. So I would say, oil over the next few weeks. When I say few weeks, I mean 3 to maybe 8 weeks. We're going to see some substantial selling in oil. All right, let's look and see if if these charts show us anything in the way of setups or anything. The euro, if you do intermediate, you can see it counts out 5 waves. So 1, 2, 3, 4, 5. Of course, we know what happens after 5. The market a lot of times will return to the 4th wave low at least, which is in this area here. So we're looking for the euro to come down, to make its way down over the next couple of months, several months, into this area off the 4th wave low. Then the trend could resume, or not, but it should at least come to this fourth wave low area first. I guess we can look at, if I can find the after hours chart. Is it this one? I don't think that one's it. It's this one? I've got several of these ES charts. That's definitely not that one. So maybe I can come over here and I'll see what the ES is right now. ES is 27.9850. 27.9850. 27.8325. Okay, so that's not live. I'm trying to figure out which one of these is live data. 27.9350. Okay, this one's live data. So you can see what the ES is doing right at this very moment. Of course, we can also see what the Euro US dollar is doing right at this very moment. Really not much. You can see it right there. Looks like it rallied a little bit from the previous close. So, but again, what we're looking, if this isn't going to make a new high, then what we would expect the Euro US dollar to do is coming down into this area, this 1.14 area, before resuming the trend higher or coming up and then making a new lower low. All right, well, that is about it this evening. It's about 12:22, which is almost 30 minutes worth of talk time, and I really don't like to talk longer than that because I start to ramble. I'm sure you guys don't enjoy that. So that is it for this week's Middle Class Investor. Again, if you're in the market, maybe you hold on to it. If you're on the sidelines, maybe it's a good time to just stay on the sidelines. But it's your money. You get to decide what to do. So choose wisely and just don't get caught up in the psychology of talking yourself out of, a place to get out. Okay? All right, everybody. Thanks a lot for coming in this week. We'll see you next time. Bye-bye.